It's like 2019, startups operating in the big four countries comprising Nigeria, Kenya, South Africa, and Egypt have raised 83% of all funding and signed 78% of all $1 million plus deals. And there is no indication, I beg your pardon, that things will change anytime soon. With the incremental funding for fintech in Africa over the years, capital injection into these startups is only likely to increase with deepening mobile phone usage and internet penetration. Despite down rounds, mass layoffs, bankruptcy, and other nerve-wracking facing the sector, startups in Africa raised $3.1 billion in the first half of 2022, hitting new milestones with recording second quarter growth rate attracting 3.1 billion US dollars. But let's get talking about this, and a startup coach joins me now via Zoom to analyze all of these issues. His name is Mr. Idowu Akinde. Thank you so much for your time. It's good to see you, Mr. Akinde.
Thank you, as always, Mr. Tolu.
Yes, interestingly, well, traffic couldn't make you come here. You know, I know you wanted to make this in person, but let's start this discussion first around startups generally. What are the basic challenges of startups in this part of the world? Because it seems like that's the way to go. But what is happening around them? What are the challenges around this part of the world?
Okay. I don't know that the challenges around here, apart from infrastructure challenges, power, internet, maybe security, and even perception, okay? But by and large, the big headers that are the usual suspects, the usual culprits that are the top challenges for startup founders around the world also apply to Nigerian founders. I didn't plan to share my screen, so let me just reel out, a few things. Number one on that list is problem validation, okay? In the startup world, we discovered that a lot of startup founders or founding teams spot an idea, or rather spot a problem, okay? Maybe they're just driving around town and they see a vulcanizer and they're like, look at this vulcanizer or mechanic. He must be having so problem. Now, they immediately take that spotted problem and start to build fanciful solutions on top of that assumption of a problem. So that's what's called problem validation. The top challenge that startups face around the world is problem validation. You can call this lack of product market fit, but at the end of the day, it is the failure or omission to validate that the problem you thought X, Y, or Z person has, you need a process for validating that that person actually has that problem. That's the first step. The second step, even if they have that problem, do they have that problem to the degree of pain that they are willing to exchange money with you for the eradication of that pain? So I don't want to get too technical, but we have a couple of approaches or techniques for making this assertion, making this validation, ensuring that people don't just spot a problem and immediately start building a solution to the problem. One of the most popular techniques for that is something called design thinking. And a lot of people may find design thinking familiar, but essentially design thinking is a set of methods for ensuring that people who are building startups are not building based on their assumptions of what the customer's challenges are. You want to start with empathy and validate that indeed what you think is a problem to the customer is a problem to that customer, and so on and so forth. So that's the first challenge. Can I go on?
Go ahead. You're making sense, real sense.
Okay. The next culprit, the next usual suspect is something called co-founder conflict, okay? Co-founder conflict, as the name implies, is a major headache for most startup teams. And it stems from a number of assumptions, again, when the lead founder is trying to recruit a core team of co-founders. Many times, not just around here, all over the world, people reward or people allot equity to co-founders in exchange for loyalty or friendship. But actually there are a set of criteria or a set of things to think about, and we can talk about this. That's what we do at Bullion Labs. We can talk about those things that are the essential criteria that every startup founder candidate must meet. Omitting or failing to carry out this initial process in the early stages of the startup creates a situation where you have created a business entity, you send their names to CAC, and their names have come back. They are now directors and shareholders on your company, and it is the most difficult task in the world, getting them to commit, because you didn't check for values alignment, you didn't check for skills alignment, you didn't check for complementary skills, you didn't check for ownership mentality. These are just some of those criteria that I said we check out for. But we have a method for guiding founders, at my company, for helping them navigate that process. So that's the second thing. Can I go on?
Go on, please. But I want you to, well, let me come in now. Allow me come in. It's really making sense, because I like to understand all of this, and I'm sure viewers are also making real sense of it. But let's also add into it the mistakes that startups make too, because they also make some mistakes.
The volume is low.
Okay, can you hear me now?
Yes, it's better now.
I said, let's also try to identify the mistakes that startups make in this part of the world.
Okay. I'll tell you my experience. Having provided some kind of coaching, mentoring, or advisory to over 700, almost 1,000 startups, not just in Nigeria, not just in Africa, on 4 continents, I will easily tell you that the number one mistake that startup founders make is that they assume that funding is essential, or rather, external funding, external investments is essential, or is what they need. And let me explain. I always sound like the prophet of doom or the party pooper whenever I say this. But the truth is that external funding, as attractive as the headlines are, so just imagine that I am, having a regular 9 to 5, and I just heard that my former classmate or former colleague at, perhaps a former employment, has just raised $10 million for a startup idea that he has not even validated or that has not even kicked off. The next thing that's going to pop up in my head is I'm going to start to remember all the startup ideas I've had over the last 10 years. And I'm going to start writing them down on the sheet of paper to see which of them I can also get funding for. So that's what's fueling all of this. A lot of people are hearing about the fantastic fundraising news all over the headlines, and they're saying, if so person can do it, why can't I do it? However, external funding should be seen as an IV, an intravenous intervention. In medical terms, a drip. We should see it as a drip rather than a vitamin or even a tablet. Typically, when you visit a medical practitioner or a doctor, they only recommend or prescribe drips when the situation is rather severe and beyond what can be managed otherwise. And we need to think of funding as that. I always encourage the startup founders to think of funding like this. And you can think of this as the magic formula for securing funding. Funding or external funding, okay, raising funds, raising external investments is automatically follows demonstrating traction. And I'll explain. What is traction? Traction is progress that is relevant for your stage, given your current circumstances. So if you're at idea stage, the expectations of someone who is at idea stage is to validate that idea, like I said earlier. If you can demonstrate to a so-called investor, right, maybe an angel, that, dear angel, I have spent all the resources at my disposal, my intellectual capital, my financial capital, my social capital, to try and validate this idea, but I have not met the kind of milestones that I want to or that are expected of me. Can you please augment my efforts with your resources or my resources with your resources? And that's the mindset. But many times people are not thinking in terms of achieving something first with the little that they have and then seeking for external support, because that's what funding is. It is an IV, not a vitamin, not a tablet, not anything else. It is a drip. Nobody ever goes to the doctor and asks, dear doctor, please give me a drip, right? The doctor makes that determination based on their assessment of the severity of the situation. And that's exactly what people need to understand. That's number one. Should I go on?
Yes, go ahead. Let's also wrap up with prospects. Of course, what are the promising sectors in the startup space?
Okay, let me go to, well, I kind of feel like, well, how do I say that? I feel like, so first of all, let me disabuse, let me talk about the white elephants, or rather the elephants in the room. There's a lot of attention on fintechs nowadays, not just in Nigeria, all over the world, right, in the startup space, but particularly in Nigeria. There is a lot of attention on fintechs. Yes, we do understand that fintechs provide something like an operating system, like a layer, like an infrastructure, the digital infrastructure upon which many other services, whether you're education, you're healthcare, you're immigration, your identity management, all of those things will rely on the payments infrastructure. Yes, we understand. But I think that too much attention is being paid by investors, by the investing community on fintechs to the detriment of the other sectors. I don't want to sound like either a capitalist or a socialist, but I will say that there are many other sectors like health tech, ed tech, there's assistive tech, okay? There's, there's all sorts, that require attention, and that if, what's the word now? Emerging tech as well, that if given attention, will deliver probably even the same kinds of returns that these investors are looking for. The risk is that because of such a high degree of attention by the entire investing community on only the fintech sector, the probability of returns therefore slims down. And then if they are thinking strategically, I would advise them to move to other sectors quickly, because it's time to pay attention to those other sectors, health tech, ed tech, and the others.
Wow, that's much time can take. I must thank you. I know it's an interesting conversation and it's your space. I see how you're picking it one after the other, but it's been so interesting talking to you, Mr. Idowu Akinde. He's a startup coach. Thank you so much. Do enjoy your weekend and please stay safe.
Thank you, Tolu.